Hey, hello folks, what's up? Ocean Goose, what's up, buddy? Back to back. How are you guys doing today? Good? Are you freezing? It's freezing here, guys, in Charlotte. Super cold. 35 degrees as of now. What's the temperature like? Where you guys at? Where you guys at? It gotta be cold, unless, I don't know, you're in Miami. In Miami, it's warm, I think. What's up? What's up, folks? Is everything good with my audio? Should. Hey, hello. There you go. Good. So, what's the temperature like in your place? Come on, tell me. Where you're at? 40 in Atlanta, good. 35 in Charlotte. Mucho frío in Philly. Tyler says, awesome. New York, 80 in Cali, awesome. Wow, awesome. 80 is like, I'm jealous. 75 here in Fort Myers, Florida. 34 in Ohio, just like here, yeah. In New York, 26. 44 Hamilton, Ohio. Is it warmer in Ohio than here? That's crazy. Yeah, we have someone from the Netherlands. What is, you're not familiar with Fahrenheit. Are you? No, you're not. It gotta be, what's the temperature like in the Netherlands? It gotta be like 6 degrees Celsius. Yeah. We are the only ones in the planet, guys, that use Fahrenheit. It's crazy. Yeah, in Alabama, 52 degrees. Awesome. In Italy, wow, we have a lot of international people here. London, 13 degrees. Yeah, it's Celsius. We are -2, -3. Yeah, it's very cold. It's very cold all over the U.S. Unless you are in Florida or Cali. Yeah, in California, the weather is always awesome. So, yeah. Can we take a look at Lyft? Yeah, we can. I mean, I can go over as many stocks as you want today, guys. But tomorrow we have a big day. Big day. And the performance of the S&P 500 and the markets as a whole yesterday and today as well is showing us that the markets are a bit antsy about Mr. Powell tomorrow. Yeah. The markets are antsy, guys. We'll be talking about that today. So, I mean, in regards to the performance of the major indices today, for the most part, nothing happened, guys. Take a look. Russell 2000 up 0.21%, 5 points. Go figure. Nasdaq up 0.13%. The S&P 500 went down 0.9%. And the Dow Jones went down 0.38%. Nothing. Take a look at the shoppiness, guys, that we've seen during the last 2 trading sessions. Take a look at this. Look at this. So Monday and Tuesday. Shoppiness. Nothing but shoppiness. And yesterday we closed below the 5-day moving average in white. This is my favorite moving average because it helps me to try to figure out who's in control of minor time frames. And today we had another close below the 5-day moving average. In regular market conditions, without Mr. Powell speaking tomorrow, I would tell you that this is not positive. That in minor time frames, sellers are starting to gain ground. But tomorrow we have Mr. Powell speaking at 2:30 p.m. Eastern Standard Time. So you need to realize that any technical analysis that I can carry out today, that I can do for you, will be subject to the general market conditions that will be seen once Powell starts speaking. Again at 2:30 p.m. So tomorrow at 2 p.m. Eastern Standard Time, we're going to have the Fed rate decision. We already know what is going to happen. The Fed will be cutting rates by 0.25%. And then at 2:30 p.m., Mr. Powell will start the press conference. And that's when we are maybe getting some fireworks. It's possible. It's possible. So take a look at what's at stake here. And of course, I am not going to start a monetary discussion with you guys, but take a look. I just want to I just want you to see this. So look, this is tomorrow's meeting. I mean, today takes place during 2 days. So the meeting actually started today. And what is going on here? Hold, I have a, come on. Oh, my computer is a bit slow, guys. Sorry about that. Okay. So this is tomorrow's meeting. Take a look. 87%. So tomorrow's rate cut is a lock. The market's already priced this in. It's old news. But get this. Oh my God, what is going on here? My laptop isn't working well, guys. Sorry about that. Oh boy. And you know that this is live TV. Hold on. Come on. All right, there you go. Okay. So this is all the information for the markets, okay? The markets already know this. But take a look at January. So Powell will believe in the Federal Reserve in May of next year. So we'll still have 3 more meetings under Powell's watch. So this is what the markets are concerned about, guys. The guidance that he will be providing tomorrow. So take a look. For the January meeting, the markets are discounting a pause. No rate cut in meeting. No rate cut in the January meeting, or for the January meeting. All right. Look, March, the second meeting of the Fed, the second Federal Open Market Committee of 2026. Look, no rate cut. According to the Fed futures as of now. This could change, of course, right? And for the April meeting, no rate cut. So this is what the markets are concerned about, guys. You need to understand that the financial markets are or behave like a drug addict. This is a very basic concept that you need to get familiar with. Yeah, a drug addict, a junkie. What's the drug of the financial market? So what's the drug that the financial markets like? Lower interest rates. This is a very basic concept that you need to get familiar with. So here goes the deal, guys. In the short term, the price of a security, the price of a stock is determined by market volatility, by news that could come out about any company that trades publicly in the stock market. So geopolitical stuff. But from a long-term perspective, guys, the price of a stock is dictated by the performance, by the commercial performance of that company. That's the way it works. In the short-term volatility, there are mechanical factors, options, and algo-driven sell-ups and stuff like that, geopolitical stuff, and Trump said this, and Xi Jinping said the other thing. But from a long-term perspective, the markets are highly efficient, super efficient. At least I believe in that. So, what determines the price of a security, or the price that the markets pay to a security, has to do with the expectation of potential generation of future cash flows. That's what actually determines the price of a security. The expectation of the markets about the ability of a corporation to generate free cash flow in the future. So when we have lower rates in the economy, the value of that potential future cash flow increases. I guess that many of you didn't know that. So now today you are learning something new. So when the Fed cuts rates without creating inflation, and without something breaking in the economy, that is positive for the stock market, because that increases the value of future cash flows. There is the reason why the markets behave like a drug addict. So what is going on? What is going on here, guys? The markets know that their drug supply will be increased tomorrow at 2 p.m. Eastern Standard Time. Why is it? Because the Fed is cutting rates. So they're happy. Why? Because I am getting more drug. I am getting more cocaine. The Fed is giving me more cocaine. So I like it. But the markets are a bit concerned about the supply of cocaine for January, March, and April. That's what's at stake here tomorrow at 2:30 p.m. If Powell is reluctant to increase the supply of drug for the financial markets in January, the markets might react in a negative way. But the good news is that you don't need to be concerned about whatever Powell will be stating tomorrow during the press conference. It's not really important. What really matters is the price action. That's all you need to listen to, guys. Forget about Powell tomorrow from 2:30 p.m. and on. It's all about price action. So price action will let us know what to do. But you have to be aware that we have a big potential market moving event taking place tomorrow from 2 p.m. and especially from 2:30 p.m. Eastern Standard Time and on. So ideally, none of you should be opening new positions tomorrow before the Fed decision and before Powell starts to speak. And I am going to be highlighting this once again. Whatever technical analysis I do here today for you is subject to the general situation of the markets. If Powell signals tomorrow that he might be open to keep cutting rates in January, that is positive for the markets, unless that decision gives rise to more inflation, or if that decision happens because something is about to break in the economy. So that's what's really at stake tomorrow, but keep that in mind. So you shouldn't be trading at all. Actually, tomorrow you shouldn't be trading at all tomorrow, guys. Like you should be a spectator tomorrow, and let's see what the price action tells us once Powell provides his guidance for the January meeting. Are we clear about this? Is this something that you guys understand? So whenever you want to sound smart, say that you're dating a new girl or a new boy, I don't know. And you tell that person, hey, I am a trader and stuff like that. I am very familiar with the financial markets. You can say what I'm telling you. You will sound very smart. Yeah, the price of a security is determined by the expectation of the markets about the generation of future cash flows. That's what really determines the price of a security in the long term. Wow. If you if you tell a girl that, she's falling in love with you. Guaranteed. Sure. Yeah. Tell her that. Or tell him that. I don't know. They're falling in love. Guaranteed. You will sound very smart. Okay. So, circling back to what happened today in the markets. Take a look at these, guys. Let's take a look at the 11 sectors that trade inside the S&P 500. So what happened today? Check this out, guys. So these are the 11 sectors that trade inside the S&P 500. You know that. You should know that we have 11 sectors trading inside the S&P 500. The vast majority of them closed today in negative territory. So energy was the best performing sector, 0.62%. Technology up 0.27%. Consumer staples up 0.22%. Communication services up 0.12%. But other than those sectors, the other sectors close in negative territory. Take a look at how, guys. From 12:30 p.m. and on, we started to see profit taking. It is very evident. Look, in all of these sectors. I mean, I think that I can take a screenshot here. Let me see. So I can show you this better. Can I take a screenshot here? Let me see. I'm curious. Yeah, I can. Look. Take a look at what happened, guys, take a look at what happened today. From 12:30 p.m. and on, every single sector started to pull back. Profit taken. The markets are a bit concerned about whatever Powell could be saying tomorrow, about the guidance that Powell will be providing. And during the last two trading sessions, take a look, just happiness. So, and again, if we didn't have Powell speaking tomorrow at 2:30 p.m., I would tell you, hey, I don't like the way that the SPY is looking like in minor time frames here. Why? Why is it? Because we closed 1 and 2 trading sessions in a row below the 5-day moving average. That implies that the markets are starting to have sellers potentially stepping in. So that isn't positive. If we pull up here a 4-hour chart of the SPY, I mean, there's nothing negative that catches the eye in major time frames. But yeah, we had 2 consecutive closes below the 5 DMA. But again, guys, if Powell tomorrow is a bit dovish and he signals that he's willing to keep cutting rates next year, because again, we still have 3 more meetings under Powell before the new quote-unquote chairman of the Fed is undesignated. Forget about. I think that would be a very bullish outcome, and if that were the case, I guess that we should be, or we could be trading way above the 5 DMA, the 5-day moving average. But tomorrow it could be, we could be in for some fun tomorrow, guys, from 2:30 p.m. and on. All right. So that being said, what stocks do you want me to go over? Let's see. So someone was asking about Lyft. We can go over Lyft, I think. Please drop a comment down below and let me know what stocks you want me to go over. Let me take a look at Lyft. That, by the way, Uber. I mean, most stocks went down today, guys, because we were seeing profit taking, and Uber actually also went down today, despite the fact that I just said that it was upgraded at noon today. So Lyft. Let me pull up here a 4-hour chart. So keep an eye on the 20 DMA, 20-day moving average. Well, what a coincidence, guys. Take a look at this. So Lyft went down today. It broke the 5 DMA to the downside, and it kept pulling back down to the 20-day moving average. The 20-day moving average is in pink. This is represented by the pink line that I am pointing out with my mouse. But check this out, guys. So Lyft pulled back for the majority of the trading session and ended up finding support at the 20 DMA. Take a look at Uber. This is interesting. Look. The same situation for Uber, guys. Look, pulling back all day long, broke the 5 DMA to the downside, and it ended up finding support right at the 20 DMA. What a coincidence, right? It's a coincidence. Look. Yeah, sure. It's a coincidence. So let me go back to the left. So the level that the bulls have to defend here, guys, is precisely that 20-day moving average. Say that the bulls can close candles above the 20 DMA, and even better, recapture the 5 DMA, the 5-day moving average, is signaling $22.50. It could be potentially opening the door for a test of the most recent high, the most recent high during the last few weeks for Lyft at $23.28. So if the stock keeps pulling back, we have other potential levels of support. So we can see over here in green the 50-day moving average. We have $20.50, which is a previous level of support. Let me pull up here a 1-year chart. Let me see. Here it is. Previous level of resistance, $20. This is the previous level of resistance back from October. No, but I can do the 4 hour. I think that I have to go. Take a look at this level, guys. Check this out. $20. We have kind of 2 potential levels of support to the downside should Lyft keep dropping. So $20 in the case of Lyft is a very important level, guys. Not only a fat number, but a previous level of resistance back from August of 2022, and also a previous level of resistance back from April of 2024. So say that Lyft keeps going down, we could expect buyers to potentially defend price at $21.20 and $20, the level that I just told you guys about. So as long as Lyft remains above $20, we could see buyers defending price and buying the dip here. And any potential bullish scenario for Lyft, in my opinion, could be ruled out if that level if $20 breaks to the downside. Since I am a market participant that likes to start positions with a stock either holding the 5-DMA as support or even better, bursting above the 5-day moving average in white, for me to start a position on Lyft, I would rather see in Lyft taking out or bursting above $22.50. So with Lyft trading above all the moving averages. But if it keeps dropping down to $20-ish, we could see buyers defending price here. So it's in the interesting category. Let's just put it that way. Lyft. Let me take a look at the market structure of LYFT. Let me take a look at the supply and the demand of Lyft. What do we see here? Let me go see. There you go. Let's see. And the market structure looks very good. So this is a market structure chart. What you guys see on top is a demand or it is or represents a demand, this blue shaded region. And at the bottom, the supply or sellers, demand buyers, supply sellers. The demand is clearly rising and way above the level of the supply, which is starting to go down. So this market structure chart makes me believe that Lyft is likely, not for sure, but likely to find support if it keeps dropping at either the 50-day moving average, $21.10, or why not $20? Or maybe we could see Lyft recapturing the 5-DMA at $22.45. So this technical chart is in the interesting category at until or unless this level of $20 is broken to the downside. This is definitely in the interesting category. Let me see if we see something interesting in the case of Lyft. In regards to anchored volume weighted average price line, let's go see where we have buyers trapped or buyers sitting on gains. Let me see. Nothing to be really worried about. Take a look at this anchor VWAP, guys. So all-time highs for Lyft, or almost all-time highs. No, this is not even all-time highs. Let me delete this. Let me see. Let me display an anchor VWAP from this most recent high. And I get an average price of $21.50. So get this, guys. So Lyft recently was rejected at $25. This is going to be something like this must be the, $25 here. So this is not a 52-week high, but this is a high that Lyft made a few weeks ago. So the average market participant that started a position on Lyft at $25, this was back on November 12th, has an average price of $21.50. That is a level that is coinciding with the 20-day moving average. If my computer wants to help me out, come on. Wow, my computer is very slow today, guys. Sorry about that. Let me see. There you go, look. So the 20-day moving average at which Lyft was able to find support that today into the closing bell is coinciding with an anchor VWAP that comes from this high, from this previous high. So this is a potential level of support. Plenty of support, guys, to the downside, unless $20 is broken to the downside for Lyft. All right, so let me see what else do we have here. Meta platforms. This was one of the only trades that I closed today making a profit, guys. Yeah, it was a very today we didn't have a trader's tape. Let's just put it that way. So today I bought back a covered call that I have on Meta. Let me show you. Look, are you guys selling covered calls? You should know how to do it. Wow. Yeah, my computer is extremely slow. Okay, look. So on December 4th, I sold a covered call of Meta expiring on January 16th with a strike of $710. I was paid on that day $11.25 or $1,125. I bought back that call today, paying $819. I ended up making here $300. I also sold another covered call on Meta because I own 100 shares. But I ended up making $300 here, so nothing to complain about this trade. In the case of Meta platforms, take a look at this 50-day moving average, guys. And I've told you on multiple occasions, and probably I must be sounding like a broken record, that the slope of a moving average is very important, super important. Why is it? Because when a stock is trading below a declining moving average, that moving average is pushing price down, is putting downwards pressure over that stock. So in the case of Meta, the 50 DMA comes in at $673. And take a look at the slope of this moving average, guys. It is clearly downward sloping. It is declining. And take a look at the spot at which Meta failed. This was back on December 5th and also on December 8th. Clear failure at what? At an important declining moving average. So Meta failed at a level that it was supposed to fail at. And take a look at this other moving average, guys, in red. This is none other than the 200-day moving average, a very important moving average. So Meta failed at a spot, guys, at which it was expected to have difficulty with. And as of now, and this is the reason why I sold a covered call once again, we are about to lose the 5 DMA, the 5-day moving average. This is a very important level for Meta, in my opinion. And again, guys, I am for the most part shorting a call option on Meta. This is a no touch below the 5 DMA. If you want to take a short-term trade on Meta, and again, any technical analysis that I can do today is subject to the general market conditions that we could have tomorrow based on whatever Powell will be saying. This stock is an absolute no touch below this 5 DMA. The 5-day moving average is signaling $660. Say that you guys see Meta recapturing this 5 DMA and starting to consolidate above it. Let's round it up, $660. That could be potentially attracting buyers into this technical chart. And if that is the case, I could see Meta making another test of this 200-day moving average, coinciding as of now with this declining 50-day moving average. But again, guys, so since Meta is trading below the 100 DMA, 100-day moving average in blue, and a declining 50-day moving average, we know for sure that there's a lot of technical damage here. So that implies that for the most part, we have a lot of buyers trapped above the current price of Meta. So you have to be careful here. That's why I sold a covered call today. Let me take a look at an anchor VWAP, or let me take a look at some anchor VWAPs in the case of Meta. And I use this technical indicator, an anchored volume weighted average price line, in order to visualize where do I have buyers, either buyers losing money or buyers making money. Take a look at this, guys. There are no accidents nor coincidences. Take a look at this anchor VWAP in blue. Where is it coming from? This anchor VWAP comes from the April low of Meta. So Meta, back in April when we had the tariff fiasco, went down to $484. So what message is this anchor VWAP sending us? Well, that the average market participant that started a position in Meta when this stock went down to $482 back in early April has an average price of $674. Wow. I cannot be making this up. So what happened here, guys? When Meta went up to $677, it made a test of the anchor VWAP that comes from the April low that was coinciding, and that is still coinciding, with the 200-day moving average and with the 50-day moving average. Big, but big level of resistance. And take a look at this other anchor VWAP. So if we take a look at an anchored volume weighted average price line of Meta that comes from all-time highs, so Meta went up to $794 back in August 14th, we get an average price of $684. So the average market participant that started a position on Meta back on August 15th at $796 has an average price of $684. They're trapped. They're losing money. They are likely, or the vast majority of those market participants that are dealing today with unrealized losses are likely to close their positions rather than add to those positions. So we'll still have a lot of technical damage here, guys. And for me, in order to say that Meta is innocent until proven guilty, which is the opposite, this stock is, as of now, guilty until proven innocent. We need to see Meta bursting above or recapturing not only the anchor VWAP that comes from all-time highs at $683, but also we need to see Meta. Oh my God, my computer is so slow today. Sorry about this, guys. Let me see. Okay, let me put up here once again the 4-hour chart. Come on. Oh my God. Let me see if I can keep going without the mouse. I would also need to see Meta trading above $710, which is a level that is coinciding now with the 100-day moving average. So the buyers still have a lot to do here, guys. There is a lot of technical damage. And now let me take a look at the market structure of Meta. And for some reason, my mouse isn't working, guys. So sorry about that. I'm gonna have to keep going without using my mouse. I might be a bit uncomfortable here, but that's okay. I can figure it out. Let's go see the market structure of Meta and take a look, guys. The market structure is actually looking good. Again, let me introduce you to a market structure chart. So what you guys can see on top is the demand, represented by this blue shaded region, buyers. And at the bottom, the supply. The demand is through the roof. So this is a very good looking market structure chart. So we could also make a case, this is a bullish case, that Meta failed recently at the convergence of the 50-day moving average with the 200-day moving average plus the anchor VWAP that comes from the April low. And we've seen Meta going down during the last 2 or 3 trading sessions, basically 2 trading sessions. But guess what, guys? The markets have been in profit-taking mode. Yesterday and today as well, because of Powell and the Federal Open Market Committee taking place tomorrow. So maybe once Powell is out of the way, if you guys see Meta consolidating above $660 or being able to consolidate above $660, that could be signaling that buyers could be potentially being attracted once again into this technical chart. So I'm bullish above 660 and be careful below 660 because this technical chart could be starting to attract sellers instead of buyers. Say that Meta keeps dropping. We have a previous level of resistance here at $638. But ideally, guys, this 5 DMA is rising. I mean, the buyers have to really step in here and prevent sellers from bringing Meta below $660. And there goes your in-depth Meta analysis. So let's keep going. What other stocks you are asking about? Let me see. Someone asking about Nvidia. Why not? Let me take a look at Nvidia. NVDA. All right. So look at this, guys. So yesterday, the news came out about the U.S. government allowing Nvidia to sell the H200 chips to China. Take a look at what happened, guys. What is the price action telling you in this case, if I may ask? Take a look. So Nvidia went up as soon as the news came out. It went up what, like $10, $6, and the whole rip that we saw yesterday once the news came out got sold. And taking into account that Nvidia is not taking into account any revenue coming from China, that was good news, guys. And don't get me wrong, it is an extortion from the U.S. government, an illegal extortion. But I'm not gonna get in. I will not be addressing that issue today. So what the government is announcing about Nvidia is absolutely illegal. It's a tax, an export tax, 100% illegal. But I am not going to be addressing that today. But this was good news at the end of the day because Nvidia hasn't been providing any guidance related with China. And the stock sold off. So we can argue that the markets are in profit-taking mode, a bit cautious, ahead of Powell. But this implies, guys, that Nvidia has completely lost all good momentum. Completely. So sometimes you need to step back and think about the message that a technical short is sending you. So this company just reported, I think that 2 weeks ago, an extremely better than expected report. Extremely better than expected report. And the stock is down. It is actually flat since the report came out. A bit lower since the report came out. And check this out, guys. Take a look at the opposite relative to Nvidia. Reporting on Thursday, by the way. Take a look at AVGO, Broadcom. What do you see here, guys? So I wouldn't do anything on Nvidia until the AVGO report comes out, because we're starting to see like some sort of two-way road here in regards to the AI trade, and it looks like what represents good news for AVGO and Google is at the same time representing bad news for the OpenAI combo. Take a look at the OpenAI combo, guys. Take a look at a technical chart of Microsoft. Take a look at a technical chart of Nebius. Take a look at a technical chart of CoreWeave. Take a look at a technical chart of Oracle, which, by the way, is reporting tomorrow. So we have Oracle reporting tomorrow after hours, which belongs to the OpenAI combo. And now we have a second artificial intelligence combo, the Google combo. So I would stay away from Nvidia until Oracle and Broadcom report. Yeah, because it could be affecting Nvidia. Maybe in a negative way, maybe in a positive way. But the technical short is telling you that there are no buyers. There are no buyers. And probably, guys, the main reason why the S&P 500 has not been able to make a brand new all-time highs is Nvidia, the largest holding inside the S&P 500. Take a look at this choppiness, guys. Up and down, up and down, up and down, up and down. So from a support standpoint, and if we, do a technical analysis in isolation without, considering what I just told you about Broadcom and the OpenAI combo, keep an eye on the 100 DMA, guys. $181. This is a very important moving average. If that moving average breaks to the downside, we are looking at $175, $170, which was the low that Nvidia made back on November 25th. So not a stock to trade now, taking into account that Oracle is reporting tomorrow, and on Thursday we have AVG also reporting. Not a good moment to trade Nvidia. And be careful if this 100 DMA breaks to the downside. This could be some sort of good night Irene situation for Nvidia. And again, guys, the momentum is gone. Take a look at the price action. Despite the fact that I just told you that Nvidia is being extortioned in an illegal way by the US government because of the sales of the H200 to China, it was good news at the end of the day for Nvidia. And the RIP got sold. Maybe it got sold because the markets are a bit nervous ahead of Powell. That could be the case. Who knows? But the price action is starting to look a bit concerning on Nvidia. Let's just put it that way. So be careful here. Other than that, let me take a look at the market structure of Nvidia. What do we see here? NVDA. All right, let me see. So what is the demand and the supply looking like? The demand looks good, actually. Look. The demand looks good. Relative to the supply. So we have the demand rising and the supply starting to go down. So yeah, maybe, I don't know, maybe the RIP got sold today because the markets are a bit concerned about Powell tomorrow and the markets are being a bit cautious, and that could be the case. The market structure is looking good. So for me to start the position here, guys, I would need to see Nvidia above the 50-day moving average, which is the very last moving average that Nvidia would have to burst above in order to potentially keep going up. The 50-day moving average, the 50 DMA in green, is signaling $187. Ideally, we want to see Nvidia above that 50 DMA. Other than that, it's not a good looking chart. And if the 100 DMA breaks to the downside, no good, no bueno for Nvidia. What is the anchor VWAP that comes from all-time highs for Nvidia? Because now this is an issue, guys, that Nvidia is dealing with. We have overhead supply. We have buyers trapped above the current price of Nvidia. This is an issue. It's an issue. Yep. Nvidia, come on. Nvidia, there you go. So let's go see. And look, an anchor VWAP, sorry, an anchored volume weighted average price line that comes from all-time highs is signaling $188. So we need to see Nvidia above $188, guys. In order, so I mean, me personally, I need to see Nvidia above $188 in order to be constructive about the stock. And get this, guys, $188 is coinciding with the 50-day moving average. So say that, you know, that Powell is in the review mirror and Nvidia bursts above the 50 DMA, I would be interested above $188. Yeah. There goes your Nvidia analysis. Netflix. Oh, don't get me started with Netflix. What a disaster. I'm pissed. I am very pissed about Netflix. That's why I'm saying, like, don't get me started with Netflix. Guys, this is a disaster. This is a disaster. If you're not involved in Netflix now, stay away from it. Take a look. This is a disaster. This is and don't get me wrong, I am a bull. This is a phenomenal company. A monopoly. This is a legal monopoly. No competitors whatsoever. A company that is growing at an exponential pace. The only streaming company that makes a profit. The only streaming company with a free cash flow. Why the heck does Netflix want to buy the garbage of BWD? I don't get it. I don't understand this. I don't understand this, guys. This is a disaster. Not only because Netflix is going to be paying like $70 billion in order to buy Warner Brothers, but also because they are entering into a political battle, an unnecessary, totally unnecessary political battle. So I don't like the deal. I hate it. I love the company, don't get me wrong, but I hate the deal. They made a mistake. You can tell me, oh, yeah, but you need to think 5 years out, Netflix is going to be killing it, and we're going to be watching Game of Thrones on Netflix. You can say whatever you want. This was a mistake. In the short term, in the medium term. We'll see what happens. The technical short is absolutely broken, and you need to understand, guys, that Netflix is entering into a political fight. A total disaster. So if you're not on Netflix as of now, I would suggest to you guys to simply stay away. You gotta wait. The technical short is absolutely broken. And mind you guys, I think that we have lower prices coming up for Netflix. I wouldn't be surprised if we see the April low, a retest of the April low at $80. Take a look at the technical short. Below all the moving averages, we have a downward sloping 100 DMA, downward sloping 50 below the 200-day moving average. The 5 DMA especially. Take a look at this. The 5 DMA is clearly downward sloping, so this is an absolute no touch until buyers show a bit of strength. How can we say that buyers are starting to show a bit of strength? We need to see Netflix at least recapturing the 5-day moving average, 5 DMA, $100. Other than that, guys, I'm not gonna spend a lot of time talking about Netflix. This is a stay away from stock. That's it. That's all I can say about Netflix. And I love the company. But well, it is what it is. Yeah. Stay away from Netflix until, buyers start to show up. So there was news that Nvidia chips are going to be heavily inspected before shipping to China. Say that is the case. It's good news, and the stock's all off. It's good news. despite the fact that this is an extortion. It's an extortion. It's an export. It's a tax for an export. Absolutely illegal. But it's good news at the end of the day. Nvidia was very. So Jensen got it right, guys. He stopped providing guidance about China 2 quarters ago. So he saw this coming, and the stocks are off. He will be able to keep selling the H200 to China, and the stocks are off. So the net aggregate opinion of the markets is telling you that something wrong is going on Nvidia. I don't know if what is going wrong or what is going the wrong way in the case of Nvidia is AVGO. If that is the case, guys, we're talking about something different. The markets are having like some sort of bifurcation in regards to the AI trade. We have the Google combo and the OpenAI combo. We'll see what happens here, guys. Apparently, the net aggregate opinion of the markets is telling us that we cannot have a lot of winners in the AI race. So we'll see what happens, guys. Broadcom reports on Thursday. We'll see. But take a look at the technical chart of Broadcom. And mind you, guys, the valuation of Broadcom as of now is way expensive. Way more expensive than Nvidia's. So we'll see what happens. If you ask me personally, I like Nvidia better than Broadcom. I mean, based on the valuation and the most recent commercial execution, but that's my opinion, you know? Yep. Opendoor. Let's go see. I think that he tried to go up today. This could be a winner tomorrow once Powell speaks. Especially if Powell happens to be dovish and I don't know. You never know, guys. Maybe Powell says that, oh yeah, I am kind of willing to keep cutting rates in January. If, I don't know, inflation keeps going down, which might be the case, guys, because, the inflation data that we are getting from the Bureau of Labor Statistics is cooked. Yeah, so I have no doubt in my mind that the fake inflation that we are being reported will keep going down. So, Opendoor up today 5% in a day in which the markets were very weak, and on a day in which we saw a lot of profit taken. And Opendoor closed today's trading session at $7.40. Keep an eye on the convergence, guys, of the 50 and the 20-day moving average. $7.60. Say that Opendoor takes out that level tomorrow. Needless to say, guys, say that Powell starts speaking tomorrow at 2:30 p.m., which is the case. He will start speaking at 2:30 p.m. And say that while Powell is speaking, you see the IWM going up, which should be a very big potential beneficiary of a potential dovish Powell, right? If that is the case, guys, and Open takes out $7.60, so if Opendoor starts to close candles above all the moving averages, that is bullish, guys. There could be a potential trade to the upside over there for Opendoor. However, and I have told you on multiple occasions, you need to get familiar with the mechanical aspects of the markets. Take a look at this. Let me see if Opendoor was actively traded today. Let me see. Because this is a stock, guys, that basically moves to the upside when we have the right conditions for a gamma squeeze. Let me see if Opendoor, is it here? These were the hottest tables in the big casino options today. But I don't see Opendoor. Is it? Let me see. If I see it, so I can re-explain this to you, because I have been telling you about the IV rank and the IV percentile on multiple occasions. But I don't see Opendoor here. To be honest with you, let me see. Is it here? Come on, Opendoor. No, I don't see it, huh? So it was not, it wasn't among the hottest, let me see, most active options. Now, so ideally, guys, for Opendoor to go higher, you want to see it reflected among the hottest tables in the big casino of options on a daily basis. And ideally, you want to see the IV rank and the IV percentile being low. Here it is. I got it. Wow, take a look at the IV rank and the IV percentile. Oh my god. I might buy some Opendoor shares now. Nah, we have Powell tomorrow. But take a look at these guys. No, yeah, I just saw it. Okay. So look at these guys. Wow, my computer is so slow today, guys. So I apologize for that. But yeah, my computer isn't helping me out today, unfortunately. So take this out, guys. So these were the hottest tables in the big casino of options today. Let's go see what happened in the case of Opendoor. Look. So the IV rank is at 2%. Wow, very but very low, guys. And the IV percentile, which measures the implied volatility during the last 12 months, is also very low. So this is the perfect scenario for another potential gamma squeeze to occur in favor of Opendoor. Yeah. Very but very good here for Opendoor. So yeah, I would definitely keep an eye on the keep an eye on the 50 and the 20-day moving average. So the IV rank, guys, and I have explained I've explained this to you on multiple occasions. The IV rank at 2% implies that all of the Opendoor options, both calls and puts, have been more expensive than today only 2% of the time during the last 12 months. Yeah, options are very cheap. And for the most part, when Opendoor runs up like crazy, that situation has to do with a lot of market participants buying out of the money call options, trying to force a gamma squeeze. And take a look at the IV percentile, sitting at 8%. That implies that the percentage of days with the implied volatility closing below the current at the money implied volatility during the last 12 months is 8%. So from an implied volatility standpoint, all of the options of Opendoor, calls and puts, are very cheap, not expensive at all. So this one is on the top of my watch list. I didn't know that Opendoor was trading with the IV rank at 2% and with the IV percentile at 8%. This is very positive for Opendoor. And this could be a beneficiary of the Federal Open Market Committee drama tomorrow if Powell happens to be dovish. But you cannot start the position in Opendoor before Powell tomorrow, okay? This is a company that is basically selling homes, right? So it is very sensitive, super sensitive to the perception of the markets about future interest rates. You guys are asking about Palantir. Yeah, I was telling my boys of Christian's Discord about Palantir yesterday and today. And you know that we are expecting a potential test of $185. This is a technical chart that looks very good. So Palantir, you know, on a day in which we saw a lot of profit taking. Not a lot of profit taking, but you know, profit taking ahead of Powell, whatever. So Palantir was able to pull off today a green day up 0.19%, and it closed the trading session at $181.84. So take a look at Christian's Discord. What is Christian's? My friend Christian's. By the way, that you guys have there's a group call taking place on Thursday for the community of Christian, but I will be out of town. I'm not gonna be able to be there. Yeah, I have a previous commitment. You guys will know. Yeah, I have to take a trip to the Big Apple. So I've been telling you guys about Palantir. Let me see the gap field. Yeah, we've been talking about Palantir. This was today, right? Is it November 9th? Yeah, it was today. Look, I've been telling you about $180. This was yesterday in Christian's Discord. Why am I talking about 180, guys? Because of this. Look, let me zoom in here if my computer helps me out. Look, this is your $180. So at $180, guys, we have the 5-day moving average, a rising, by the way, 5-day moving average coinciding with the 50-day moving average in green. The 5 in white The 15 green, 180 bucks. A potential process of consolidation of Palantir above $180 implies that Palantir is consolidating above all the moving averages. Look, the 200, the 100 in blue, the 20 in pink. But check this out, guys. If we take a look at an anchored volume weighted average price line for Palantir, wow, my computer is really giving me a hard time today, guys. Yeah, super slow. Okay, so look. I need to restart it, I guess. Okay, come on. Pltr. Take a look at this. This is an interesting detail. So an anchor VWAP. All right, let me see. There you go. Look. Is signaling as of now, guess what, guys? $178. So if Palantir keeps consolidating above $180, which is the level that I've been calling out for the members of Crescent's Discord yesterday and today as well, that is a potential situation that could be attracting buyers into this technical short. Palantir could be off to the races here, guys. A potential process of consolidation above $180 could open the door for a test of $190, a very clear previous level of overhead resistance back from mid-August. So this is the bull case. In the case of Palantir, say that the markets sell off tomorrow because Powell said this and said that or whatever it is. So the line in the sand for us to remain bullish on Palantir is the convergence of the 20-day moving average with the 100 DMA. So the 20 DMA is signaling as of now $171, and the 20 DMA is signaling $171. If that level breaks to the downside, forget it. The short will be considered, at least, by me, as guilty until proven innocent. But as long as Palantir remains above 171, and especially if we keep closing candles above 180, that's a potential bullish development that could be attracting buyers into this technical chart. And now let me take a look at the market structure of Palantir, bro! The Messi of artificial intelligence. Let me see, Pltr. By the way, Messi killed it, guys, on Saturday in the MLS finals. What a game, guys. Two amazing plays. Okay, well, the market structure, take a look. Looks super positive. Again, guys, demand on top, supply at the bottom. Demand buyers, supply sellers. The demand is through the roof. And the level of the supply is lower relative to the level of the demand. So we can actually easily reconcile this market structure chart with the 4-hour chart that I just showed you. Here, look. This is a good-looking chart, trading above all the moving averages. So, yeah, give me Palantir above 180, and I think that higher prices are coming up more likely than not for the Messi of artificial intelligence, according to our boy the Knives. We are, let me see, guys, 57 minutes in. So, yeah, we have time for one more stock, I guess, because my laptop isn't cooperating today. And you guys are asking about, let me see, AMD. Be careful with AMD, guys. This is another stock that belongs to what combo? I was talking about that with you a few minutes ago. What combo does AMD belong to? Remember, we have two combos in the AI trade. Let's just put it that way. What is the combo of AMD? I mean, if you take a look at the technical chart, you can tell what combo, what AI combo AMD belongs to. What do you think? Remember, we have like some sort of a bifurcation here. So, under what combo of the AI trade you would put AMD in? OpenAI, big time. That is correct. Oh, yeah. Oh, yes. This one belongs to the OpenAI combo. Yes, big time. That is correct. So, up today, slightly, 0.23%, and it closed the training session at $221. Why do I say that, guys? Because Oracle is reporting tomorrow. If Oracle drops the ball tomorrow, and I don't know, I don't have a crystal ball. I'm not going to be predicting anything before an earnings report comes out. But if Oracle drops the ball tomorrow, guys, oh boy, your AMD, your Nvidia, your Microsoft, your Nebius, your what else? CoreWeave, buckle up. So you shouldn't be starting a trade on AMD with Oracle reporting tomorrow after hours. Okay? You see what I'm saying? All right, take a look at this 20-day moving average in pink. Clearly downward sloping. And on top of that, coinciding with the 50-day moving average. $226. This could be a vehicle, guys, in order to trade the Oracle report. And again, guys, I've told you this on multiple occasions. I am actively trading earnings reports. I do it. I actually have a tier on my Patreon in Spanish in which I am actively trading earnings reports with Kilted. I've been doing that for years. But I never buy neither calls or puts before a report comes out. I wait for the report to come out. I take a look at the report. I am aware of the expected move and I buy shares if the conditions are met. So, say that Oracle reports way better than expected and the markets love the report. This could be a vehicle to trade the Oracle report. Say that AMD bursts above the 50-day moving average. That is pretty much coinciding with the 20 DMA. So say that the Oracle report comes out and you guys see AMD bursting above $236 after hours. I would be a buyer of AMD. Yeah, this could be a beneficiary of the of Oracle's report. It's possible. Now, take a look at how tight AMD looks here, guys. Let me zoom in. Look. So we have the 20 and the 50-day moving average pretty much coinciding to, so the 20 is at 223 and the 50 is at, let me see, 226. This is a $3 zone as of now, a potential resistance zone here, right? And take a look at the 5 DMA, guys. That, by the way, is trying to rise. So the 5 DMA is signaling $218. So below $218, below this 5-day moving average, in my opinion, a no touch. But say that, Oracle doesn't drop the ball and the markets like the report and stuff like that and the commercial guidance of Oracle because of the circular revenue situation between OpenAI and Nvidia and AMD and Microsoft and whatever that is. I would be interested in starting a position on AMD above 227, guys. Yeah. Super interested. And in my opinion, should Oracle drop the ball? I don't think this 5 DMA is holding, guys. I don't think so. The 5 DMA is signaling $218. So a very tight range here for AMD, below 218. A no touch in my opinion, unless, I don't know, maybe you're interested in buying puts. And above the 50 DMA, 227, I am constructive about AMD. But let me take a look at the anchor VWAP that comes from all-time highs for AMD. Let me see. So let's go see here, AMD. Okay. And we'll also take a look at the market structure of AMD. AMD. Advanced Money Destroyer. There you go. Look, so the anchor VWAP or an anchored volume weighted average price line that comes from all-time highs is signaling $234. So for the most part, guys, let's say that the vast majority of buyers that are trapped as of now on AMD with unrealized losses are trapped at $233. So that implies that ideally for us to be a bit comfortable, let's just put it that way, in order to go long AMD, we should see AMD trading above $233. Ideally, let's just put it that way. So if we go back to this 4-hour short of AMD, so the 50 is at 227, 228. So there could be a trade from 228 up to 233. because we know that the anchor VWAP that comes from all-time highs is signaling $233. So ideally, we should see AMD above $233, which could easily happen, guys, if Oracle can, ease the concerns about the OpenAI combo. Yeah. So a no touch below the 5 DMA. I am 50% constructive above the 50 DMA 227, and I would say that AMD is innocent until proven guilty above 233 or above the anchor VWAP that comes from all-time highs. Let me take a look at the market structure of AMD. All right. Okay. AMD. Let me see. Wow, it's already dark here, guys. What a horrible season of the year. You have no idea how much I hate fall. It's already dark, guys. Unbelievable, man. What a horrible season, huh? So the market structure looks good. The demand is rising and the supply is going down, right? So this is a good-looking market structure chart that we can reconcile with this 4-hour chart because the 5 DMA in white is starting to rise. So from a market structure standpoint, we can make some sort of a bullish case on AMD, but ideally we need to see it above 233, guys. 229, from 229 up to 233, there could be a trade up there, and even better above 233. And let's see what happens with the OpenAI combo tomorrow, guys. Again, your Microsoft, your Nvidia, your Nebius, your CoreWeave, your AMD, showtime for the OpenAI combo tomorrow at what time? Let me see. What time is Oracle reporting, guys? Let me tell you. I can tell you quickly here before I wrap it up. So Oracle reports. Oh my, that is so slow. I need to restart it. Let me see. So Oracle reports at, let me see, what time? 5 p.m. 5 minutes after the close. And of course, guys, say that, and I didn't say this, but I just remembered about this. Oracle also picked a horrible data report because Oracle is going to be reporting 35 minutes after Powell is done speaking. So if the markets, are sour because of the guidance that Powell will be because of the guidance that Powell provides, that could also affect in a negative way the reaction of the markets to the report from Oracle, right? They picked a horrible day, really, to report earnings. Horrible day. But, it is what it is. Okay, guys. So, yeah, thanks. Thanks for joining me today. So, thanks to the members of my Discord in English. Thanks a lot to the members of Christian's Discord. You all are my guys. Yeah, I love you guys. And, well, we'll see what happens tomorrow, guys. 2:30 p.m. Paul. We are an hour and 6 minutes in. Yeah, that's it. Take a look. It's already dark here. What a horrible season of the year, guys. I can't believe it. Unbelievable. Thanks, guys. You have a great Tuesday night. And I will see you guys tomorrow in the Discord. Okay, on both Discords. Christian's and mine as well. Thanks, guys. Take care. I love you. Bye-bye. Take care. Good luck with the OpenAI combo. Bye. Take care.